today. We are about to film our show here on the Tax.Pro show. So jump in. If you've got any kind of questions or comments regarding taxes, feel free to leave me a comment right here on this video. And if I can, I will hopefully see that. I'll check here and get you an answer. Also, my team will be kind of watching and they can maybe help. So here we go. So I'm going to just go ahead and do the intro.
Yeah.
You said we're live?
Yeah, so
We're rolling?
do the intro.
Okay.
An exordium could be, because you can, there's three different penalties, right? There's underpayment penalties, failure to pay, and then failure to file is the worst one.
Yeah, failure to file is the worst one. So I'd say let's start there. So,
So you could say something like, are you in danger of failure to file?
okay, so with IRS, you've got interest on, let me start again. So with IRS, when you owe taxes, you have interest, you have failure to pay, which is an additional interest. So it's like double interest. You've heard of double breakfast. This is like double interest. And then you also have my favorite, the failure to file penalty. Now, the failure to file penalty is the biggest of all the penalties. So how do you know when you're subject and are you subject? Find out here in a minute.
Today on the Tax.Pro show.
Yeah. So welcome to the Tax.Pro show. I'm Josh Nie with over 20 years of tax experience, and I am glad you've joined us. We're going to get into a hot topic today, and that's going to be, what are we talking about?
Estimated tax.
We're doing estimated tax payments? Okay.
Yeah.
So that exordium probably isn't going to work because that'd be for extensions.
Oh, yeah, because, it's really kind of for both.
Yeah.
Yeah. You want to get into personal extensions first?
Yeah, let's do that. Well, no, let's do estimated tax payments first. All right. So let me say it this way. If you get to the end of the year and you owe taxes and you're tired of owing taxes, we're going to give you some practical things you can do to avoid that in the future.
Yeah. An exordium could be, are you missing out on estimated tax payments and subject to a failure to file? That's the worst of all penalties. Find
Failure
out.
to pay, yeah.
Or failure to pay, sorry.
Nope, you're good.
Wait, failure to pay I thought was second worst.
So it's interest, and then failure to pay is another interest. It's just literally a percentage, just like second interest.
Yeah.
And then failure to file is the biggest.
That's what
But failure to file, really failure to file is avoided by filing the extension.
Right.
So that's why I was leaving that one out. But if you don't owe a balance, then you're not subject to any of them.
Okay, I'm with you. Gotcha.
So, all right. So let's just do this. So we'll jump in here. So on that exordium, I was just thinking we go something like.
Are you racking up penalties due to not paying your estimated payments?
There you go.
Yeah.
Are you subject to estimated tax payments? Not sure? Watch this episode to learn more.
You subject to estimated tax payments, or do you focus on the potential penalties?
I don't know. We can go either way.
Yeah.
Are you subject to penalties from?
Well, I don't feel your conviction on this. Need
Okay.
the conviction.
I'm not
What's
convicted.
a common call that you get or a situation about estimated tax payments? Like, do people miss them? Do people?
Mostly they just don't know if they need to make them or not.
Okay, well there you go. Let's do that. Hey, are you aware that so many of my clients don't even know about estimated tax payments?
I would even say most taxpayers don't know. Most taxpayers don't know the importance of estimated tax payments. Are they important to you, or should you not care?
That's great. I love that. Because you just made it about the viewer, which is perfect. Love it.
Okay.
Let's get into it.
Do I need to redo the intro? Probably, because I flubbed it. Let's go again.
Okay.
Welcome to the Tax.Pro show. I'm Josh Nie with over 20 years of tax experience, and I'm glad you have joined us today. We're going to jump into all the things you need to know about estimated tax payments.
Let's go. Okay, estimated tax payments. What are they?
So, estimated tax payments are a way for you to send additional money, which I know you all want to do, to the government for taxes.
But what if I don't wanna?
What if I don't wanna?
Go ahead, Jackson.
Okay, when they are required, or I'm sorry, when are tax payments required?
All right, try that again because you were into laughing.
When are tax payments required?
Yeah, so this is a great question. You generally owe tax when you make money. I mean, that's not generally, that is the rule. I'm going to say that again. You owe tax when you make the money. So that's when taxes are due. They're not due at the end of the year. They're not due on April 15th. They're due when you make the income. So if you have income, you either have to pay estimated tax payments, or you have to have the proper withholding, or you have to have a combination of both of those that'll make up any tax that's due.
So in a sense, is it almost like budgeting for your total tax bill at the end of the year?
Yeah, so if you, yeah, basically, I mean, kind of like budgeting, it's more like rendering to the government what's the government. So let me tell you a story. So why do we have, does anybody know why or where, or Jackson, I guess in this case, because you're the one that has a microphone, why we really have W-2 income and why that came about?
Great question.
So the reason that we have W-2 income and why that came about, it was to, make compliance easier with regard to Social Security tax. So whenever we changed wages and we started collecting more Social Security, it was easier for the government to collect from business owners than individuals. And that's when we basically started getting withholding, was on the W-2. Before that, everybody would have to either make quarterly estimated tax payments or pay the amount due with their tax return. And so that's kind of where they came from. And we pause to reflect on those deep words. You are welcome.
You good there?
Yeah, I'm good. I'm just thinking. Will I get penalized if I don't make estimated tax payments?
Potentially, yes. So it depends. If you had a refund on your prior year return, then you might be okay as long as your withholding covers the majority of the amount of tax that you would owe. And yes, there are technical percentages, but I'm going to leave all of that off of this video because I don't want to bore you with those nerdy details. However, if you're really close to enough withholding, then you're probably okay. But if you don't have enough withholding on your W-2 or you have no withholding on your W-2 because you changed jobs, then you should pay those estimated tax payments. A good rule of thumb, if you're a sole proprietor or a business owner, I would tell you to send in about 25 to 30% of your income from that business for those estimated tax payments. So let me give you an example. Let's say that you bring home $1,000 from your business. What I would tell you to do is to set $300 aside and send that in with your quarterly estimate when that quarterly estimate's due for that quarter, and that'll keep you out of trouble with the government. It's like withholding on yourself for your own self-employed income.
Okay, so give me give me a breakdown of the most common scenarios of who pays estimated payments and why.
Yeah, generally, people that have estimated payments due are people that have income other than W-2 income, or sometimes if they have really high W-2 income, they may be subject to estimated payments. So let's say you've got a business, like a sole proprietor or an S corp or a partnership. You've got a rental property. You've got capital gains potentially if you sell stock. Any and all of those things could create a scenario where you would need to pay in an estimated tax payment.
Okay, so
Okay, hold on a second. I was trying to type it. Okay, here's the point where we're gonna do a challenge, okay?
okay.
We're gonna go like ding ding. Here comes a challenge, right? And you're gonna have fun with it. The challenge is, listen, all of this sounds Okay, great. You're telling me how to pay my estimated tax bill. Josh, are you not a high dollar accountant? If I, if I'm with you, are you not going to help me go lower with my taxes? I don't wanna spread out my payments. I wanna pay less taxes. I thought you were a high dollar accountant. I thought you were gonna help me with my taxes, right? So that's the challenge here.
Okay.
No, no, you need to
Channel
get
my-
spicy,
I
man.
gotta get that channel my inner taxpayer, like.
Channel your inner Mike Tyson.
You're pissed because you owe tax.
Yes. Okay, high dollar earning accountant. I've got a question for you. I don't really want to spread out my tax bill throughout payments throughout, quarters of the whole year. What I want to do is I just want to pay less in tax in general, and I don't see how this is going to help me.
Okay, great. So here's how you can pay less tax. Let me help you right away. Number one, give me all of your income.
That's insane.
You will pay less tax. I promise you. Number two, you could donate all of your income to charity. Number three, you could sit on your couch and play video games as long as you don't get paid for that. You can lower your income. All of those things will help you pay less tax. Now, I challenge your challenge. It's a lot of challenging. And the reason I challenge your challenge is because I don't think you actually want to pay less tax. And I will prove this point. If you go back and you look at somewhere around the early 1940s instructions for the 1040, I believe it's 1942 or 43, the highest tax bracket was 91%. And that was if you made like $200,000 and above. So it doesn't make a lot of sense if you're giving 91 cents of every dollar to the government. Then it might really make more sense for you to spend those dollars to get a tax write-off. However, that's not today. That's not the world we live in. Most taxpayers, even the super high income earning taxpayers, at most are paying like 28%. That's the really, really high number. Most of them are much less than that. So 28 cents on the dollar is all they're paying in taxes. And I know we're getting really kind of nerdy here, but at 28 cents on the dollar, you still have to spend $1 to save 28 cents. That's like a quarter. So you're going to spend 4 quarters to save 1 quarter. Is that smart math? No. Instead, you want to make more income. Even if we hit the top bracket, it was 91 cents that you gave to the government, you would still take the additional dollars, and I can prove it to you. Because if you made $1 billion and you had to give 91% to the government, I'll bet you would still take the $1 billion.
Wow. So that 91% you said, was that like federal tax or is
That was federal tax alone. And again, that was in the early 1940s. We don't have those rates now. We're on the lowest rates we've had in 100 years, and I've been saying that since TCJA. So it makes 0 sense for you to spend $1 to save 28 cents on the dollar. Most taxpayers are way, way less than that. Most taxpayers I would say the average of high income earners is 20 cents on the dollar. And when I say high income earners, I'm talking about people that make $1 million or more a year. So that's the top 1% of taxpayers. Even at that, most of them, if they're tax efficient, are only paying 20 cents on the dollar, maybe 24 cents on the dollar at the top.
Okay, so if that's the wrong question to be asking, what's the right question to ask?
How do we make more money? That's the right question to ask. Because in our economy, that's what you want to do. And the next question I would ask you is, why do you want to make more money? Let's define the why, because the why is more important than the how. If you're trying to make more money because you're trying to pay off debt, or you're trying to give it away to actually help a charitable organization, or you actually are trying to change something within your family, those are good, noble causes to make more money. And if that's your reason and that's your why, then let's make more money. Yes, we don't want to give more to the government than we should, and we're going to work on being tax efficient. I'm not saying there's nothing you can do, but at some point, we don't want to drop dollars to pick up dimes. It just doesn't make sense.
No, it doesn't, for sure. Especially after explaining that. That's wild. Okay, so back to estimated tax payments. When do you recommend them?
I recommend making estimated tax payments. If you consistently owe tax every year, then you should definitely consider making estimated tax payments. you've got a couple of options, and this is what it gets tricky. This is where you might need to hire a tax pro. Option number one would be, if you have it, would be to increase your withholding on your W-4. That is definitely an option. Another option is increase withholding on your W-4 and pay quarterly estimated tax payments. Either one of those or a combination of the two, that's smart taxation, that's smart planning. Just don't be the guy that doesn't do anything and pays a big amount of interest at the end of the year just because you're ignorant.
That's good.
Okay, quick pause there, that's actually great. I was gonna have you finish it out, but ask him about W-4s and withholdings.
Okay, yeah.
How those work with. So in other words, like,
Yeah.
you mentioned my W-4, that's great. Is my W-4 always accurate?
Okay.
Because I think that's a good thing to talk
Okay.
about.
So you mentioned W-4s and changing your withholding from your W-4. How do you do that, and how do you know if it's accurate?
I'm sorry, ask me again.
My name's Puddington. Ask me again. I'll say the same. No. So you mentioned W-4s and changing W-4s to make sure that your withholding is accurately accounted for. How do you do that?
Yeah, so if you want to change your W-4, it's with the new W-4 that we have, I mean, I'm going to be honest, it kind of sucks. It's not very good. I know that it's supposed to be easier, but they've made it way worse because we used to have like things that we could do to adjust it up or down, and now we pretty much can only adjust it up for the most part. So if you're over withholding, it gets more tricky. If you're under withholding, you can always do additional withholding. So let's say you owe $12,000 on your tax return. One thing you could do is you could increase your W-4 and you could say, for each paycheck, let's say you get paid monthly, for each paycheck I want to take an additional $1,000 a month out of my paycheck. You can change your W-4 to withhold that $1,000 a month, and that's going to cover you $12,000 for the year. So that's the simplest way of fixing this problem. If you were in that scenario and you didn't know if you would actually have that W-2 income that consistently, like maybe you got a bonus or maybe you have rental or some other type of income, then instead of changing the W-4, you could just make an estimated tax payment. And what that would look like is $3,000 4 different times of the year. The first one's April 15th, then June 15th, then September 15th, and then the last one is January of the next year, January 15th of the next year. And you could just divide it up $3,000 a payment, and you could also get the $12,000. So either option would get you there. It just depends on what you want to do and what works best for you and your family.
I think another important thing is to make sure that you're, and correct me if I'm wrong, to make sure that on your W-4 that your filing status is correct as well, because doesn't
Not necessarily.
Okay.
You can change your filing status to withhold more or less, and that gives you a little bit of room on that W-4. But if you are consistently owing, let's say you owed $6,000 for the last 3 years, go in and change your W-4 to withhold an additional $500 a month, and that's going to get you to the $6,000, and you won't owe the $6,000 next year because instead you'll have the withholding throughout the year, assuming that you did it in January. Obviously, if you made that change in July, then you would only have $3,000 of the $6,000, so it'd cut it in half. You'd still owe $3,000, and then by the time you get through the next year, you'd have the $6,000 withheld.
Awesome.
Very good. Just want to ask him that last one.
Yeah, I'm sorry.
Basically.
Oh, yeah. So this is very useful information, really great. What else would you like me to know about estimated payments, withholding, kind of regarding everything that we've talked about?
Well, first off, it's not something to be scared of. It's really not that difficult. When you have an amount due and you need to make that estimated payment, you want to go to irs.gov and you want to pay through there. That's what I would tell you. Make your estimate payment directly through irs.gov. The other thing I would say is it's better to be close to zero than have a big balance at the end of the year or to get a big refund. So you want to adjust. You can use that W-4, you can use your estimated payments to kind of adjust it so that when you get to the end of the year, you don't owe a huge amount of tax and there's not a big surprise. And then the last thing I would say is if you find yourself in this situation and you don't know what to do, get a tax pro. hire somebody like us because we know what we're doing and we're going to help dial that in to where you don't have a surprise at the end of the year. We'll help make sure that your W-4 is accurate. And if you need to make those estimated payments, we'll give you some guidelines that are specific to you to ensure that you're getting the right amount paid.
Very good. Love it. All right, give us an outro, Josh.
Man, thanks so much for joining us here on the Tax Pro Show. I'm glad that you tuned in. Hey, don't forget to like and subscribe. Every subscriber that we get helps further our message of taxation to the rest of the world. We're here to educate you. We're here to help you. We're here to help you learn and get better at taxes. It's just like riding a bike. The more you practice, the better you get. If you have any questions or comments or concerns, you can reach out through our website, tax.pro. We are here to help, and we appreciate you tuning in.
So I have a question.
We need to do a comment.
What?
Hang on.
Okay.
Hey, if you need to, no, I'm going to say it this way. Hey, if you are frustrated with estimated tax payments, comment below. I want to hear your frustrations, your thoughts. Let me know.
Okay, I want to know because I've heard about the filing status for the W-4, and we just filmed this, and I know that, like, I want to know, because I feel like if you're married, don't you want to mark that so that, because it, like, doesn't...
It's going to withhold less if you go from single to married.
It's going to withhold less, right.
Yeah.
That's because...
You can get in a situation where you owe. I mean,
Really?
you got to be
Okay,
careful.
gotcha.
Yeah, you got to be careful.
About that.
Yes, I say only change one thing at a time. So if you were going to change your W-4 and you're going to go from single to married...
Hold on, before you answer that, if you don't mind, I'm sorry.
Yeah.
And ask that question. Let's get it in this video. It's a good question.
Okay.
So say, hey, no, and I think it's good to be real, by the way. I think for you to say, hey, I'm working with you in tax, you're my dad.
Yeah.
I wasn't even aware of this. That's okay. People will relate to that.
Okay.
You can say, hey, so explain to me, I'm still confused a little bit. Explain to me when I'm filling out my W-4, what is that doing?
Okay. I'm a little bit confused still. So whenever you're filling out your W-4, and let's say I'm married, why would I mark it single filing instead of married filing? How's that going to affect my withholding?
So a lot of people get confused on this, and so it's a great question. I will say this. Your filing status and your W-4 status do not have to match. That's real important.
Okay.
They do not have to match. They are completely separate, and they're separate calculations. If you're single and you go to married because you got married, you need to be careful with making that adjustment. Because what can happen is, inadvertently, by doing that, you're going to withhold less money. And when you withhold less money, you may have a balance due at the end of the year. What I tell people to do is only make one change to your W-4 at a time. Don't go in and change 15 things, just one change. If you make that one change, then compare to what that did to the prior pay period so you can see, did my withholding go up or down, and how much? And then if you multiply that throughout the rest of the year, you know what that change is going to be for the current tax year. So only change one thing at a time. For the most part, I would say just adjust your additional withholding. That's going to be most of the time the thing we want to do. Sometimes we want to withhold less. One of the things we could do is go to that married status because that's going to withhold less. But if we do that, likely we're going to have to make up a shortfall. And so then we'll withhold additional to make up that difference.
And why is your withholding going to be less? Is it because your standard deduction changes?
So pull it up. I don't have a way to show you. Here's this chart. There's a chart, and there's a chart based on your wages, and there's a chart for single, there's a chart for married, and all of that is what controls the withholding. So it depends on your income, right? So when you go married filing joint, you can make twice as much income in the same bracket as when you're single. So if you made $10,000 single, that's going to be taxed, or $10,000 of taxable incomes, 10%. If you're married filing joint, you can make $20,000 at 10% before you go to the next bracket.
Okay.
Actually, and I don't know what the exact dollar amount is, but that's an example.
I got you. Nice.
Okay, great.
Is it more clear now?
Yeah, and I'm loving this format. I think it's so great. I think it's so much more engaging for you to be asking questions and to have a challenge section. I loved it. So we have the light on, we went live, we did an interactive, good job. The tagline, you don't know what you don't know. I don't know how to bring that in. He's like, come again?
I'm sorry. I have a lot of things going on here.
Okay.
You don't know what you don't know.
We don't need to add that into this episode, but it's just good to think about that.
Gotcha.
So next one, if we're good, let's move into the next episode.
Okay.
What are we doing? What are we doing for this one?
This one, I'll send you questions as well. So filing a tax extension for individuals. So we're gonna go into how to do it. We're gonna go into why to do it, what happens when you do, i.e. things like you still have to pay, even though you don't have to file yet, you still have to pay. That's a big one. So it doesn't help you with federal, you're paid, basically.
So this is the penalty one.
Yeah, this is the penalty one. We also, I don't know if you want to talk about this, because I've heard you say it, that it is kind of like a remarkable thing that you're never audited when you file an extension. I don't know if you want to mention that on the show. Okay, so penalties, well, you could just basically say it's not going to be putting you at audit risk.
Yeah, for sure. Yeah, it's not that you're never. It's that you have a lower risk.
Yeah, there you
That's
go.
what I would say.
Okay. Interest can accrue.
But even that, I mean, that's only. Yeah, I can't. I don't want to say that. I will just say that it doesn't. It's the naughty and nice list.
It doesn't. It doesn't.
It doesn't put you on the
penalize
naughty list.
Yeah,
Yeah, that's
exactly.
what most people think. It's Santa Claus naughty nice list.
Exactly.
Mm-hmm.
Also, if we talk, we could talk about if you extend. Remember, you still have to pay, and if you don't pay, there's interest. People don't sometimes know that. So
Interest and second interest,
yes.
like
So-
11sies.
Yeah. There you go. How to do it, when to do it, all that stuff. So we'll get into it. I'm trying to think of any other questions. You know, how do you make payments once you make an extension? Does it change? No, it doesn't, but we can go to that. You could mention estimated tax payments and say, hey, we just did an episode, it's similar. And I think that's it.
I'm not sure which one will drop first.
Yeah.
All right. Let's do this. Let's do. Okay.
Like,
So-
as an exordium, you should definitely do the naughty or nice list. You should play on that. You should be like, if I file a tax extension on my taxes, does that put me on the naughty list?
Okay, here we go. If you file an extension of time for your taxes, does that automatically put you on the naughty list?
Try one more time.
If you file an extension on your taxes, are you now on IRS's naughty list?
Beautiful. Intro.
Hey, welcome to the Tax.Pro Show. I am Josh, an EA with over 20 years experience. I'm glad you're here. What I'd like to do today is talk about a sensitive topic, and that is tax extensions. Missing this one thing can cost you a lot of money, so stick around and we'll get into the details.
Beautiful. I love it. All right. We want to have Jackson open
Yeah.
it. So, first question is, how do I file, or why do I file tax extension?
Okay. So wait, hold on. Did you send me these?
No.
Okay, you just all right. I got
Sorry,
you.
let me
got
get-
you.
let me
No,
go
no,
to you.
you're good. I pulled some out. So why exactly do we need tax extensions?
Well, hold on. Let's do it this way, because I think that's a dumb question.
What exactly
about
is a
this?
tax extension?
Okay, so I need to know how to file an extension because I'm either running behind or just don't want to pay right now.
I'm late.
whatever.
Yeah.
late.
Right.
So you could just start from there. I'm late. How do I file a tax extension?
Yeah.
Or you can just say this: I'm late. What do I do?
Yeah.
I'm not going to be able to get my return done by the due date. What do
There
I
you
do?
go. There you go.
I'm late filing. What am I going to do?
So this is a great question. And what happens with this is you've got some options. So you can file the 4868, which is a form that you file with the IRS. There's not a lot of information required for this form. And it will give you an automatic 6-month extension on your personal return. This extension is extension of time to file the return. It is not an extension of time to pay any tax due. The tax that you owe has to be paid by the due date of the return, which would be April 15th or thereabouts, depending on, sometimes it gets shifted because of holidays. But assuming that you don't owe any taxes, you can file that extension, or if you do owe taxes, you can file the extension and pay the balance with the extension, and that'll give you 6 months to file your return.
Is there a fee to filing an extension?
No, the IRS does not charge a fee. Now, most tax pros do charge a fee. And the fee, believe it or not, is not for the extension. Why do they charge a fee? Well, we charge a fee because we know that if we file your extension, likely we're going to spend a lot more time following up with you to get your tax information to file your return. And so it's going to extend our process. So we charge for them, and I don't have a single buddy that I know of that does not charge for filing an extension. The only exception is if we were, for some reason, unable to complete your return on time and you got us the information well ahead of the deadline and it was on us, then we don't charge. We'll get that extension for you and you're good to go.
So whenever I file an extension, does that mean that I avoid paying penalties?
So yes and no, right? So
Question, sorry there.
that's okay. So the extension, yes and no. The answer is yes and no. So the extension will get you out of the failure to file penalty. So with IRS, there's 3 different penalties. We have failure to pay, we have failure to file, and then we just have interest. Interest and failure to pay is like second interest. Those two are just essentially interests on the tax that you owe. Failure to file penalty is a really hefty one, and that's the largest of all of those assessed penalties. It's a big number. You really don't want to get in a situation where you owe it. Excuse me.
You're good.
It's back to me.
Oh, you're done with it. Okay, I
Oh.
thought you were saying.
I thought you were saying
I'm sorry, my
too.
bad.
So will I be placed on the naughty list by filing an extension?
The naughty list. Everybody believes, or there's a lot of people that believe that by filing an extension, you're automatically on the naughty list, right? You don't collect $200, you don't pass go, you go straight to jail. Listen, that is not the case. The IRS is not mad at you if you need more time to file your return. Sometimes you don't have all your tax documents by the due date. You're waiting on a K-1 or you're waiting on a brokerage statement or something changed in your situation. Maybe sometimes you need to file an extension because the IRS hasn't approved a form, or there's a change in the state, or there's a change at the federal law, and they're still working through the details of that. An extension is not a bad thing. Matter of fact, I file my return on extension, not because I think not because I think it's bad or it's good, I get some positive thing necessarily from it. It's just I want a little bit more time to think through my return after it's all done, because I've got K-1s and rental property and all these different things, and I want to make sure they all flow together and that the return makes the most sense. And I like to sleep on it once I get it done. And then I pull that trigger later in the year, and I don't have to do it April 15th. Most accountants file an extension. Most of them don't file their return on time. Why? Because they're busy getting everybody else's work done. So that's just one more reason to give you a little bit more time if you need it to prepare that return.
Okay, I had a challenge. I don't want to pay the tax, so I'm going to file an extension. This means that I will not have to pay the tax later after I file the extension.
No, that's not true. You're going to have to pay the tax regardless.
What?
The tax is due. Yeah,
What?
the tax is going to be due whether you file an extension or not. And that's why it's not an extension of time to pay. We have to pay the tax regardless. So if you don't know how much you're going to owe, hopefully you have an estimate, or you can get with a tax pro, and we will help you calculate an estimate of what you owe, and you can pay that in with your extension or in addition to mailing the extension, and then that gives you more time to pay. If you refuse to pay the tax, because a lot of people are that way and they're like, I'm not paying the tax to the government. Okay, if that's you and you want to pay the tax once you file the extension, you can. You will be subject to interest and second interest, which is penalty, regardless. Those things are going to be due. So it's kind of like, do you like paying interest on your loan twice to the bank, 2 interests, or none at all?
But hold on.
Your choice.
Hold on, I'll just not pay any tax. I've heard on TikTok that I'll be fine and dandy and nothing will happen to me in life.
Yeah. So I would tell you to get off TikTok.
What do you say to that?
Yeah, that's going to last not very long, right? You file that return or you don't file a return. Eventually, the IRS will file a substitute for a return on your behalf, and then they're going to have an assessment, whether it's right or wrong. Most of the time it's wrong. And then they're going to go after your wages. They're going to go after your bank account. They're going to go after your house. They're going to go after every aspect of your life.
I can't opt out of paying taxes on my W-4.
You can check the box if you are tax exempt, but remember, you signed that W-4 under penalties of perjury, which means you could go to jail for lying on it. So be careful what you check and what you sign.
Yeah, you want to avoid jail, that's for sure.
I'm too pretty for jail.
That's right. Okay, so if I do owe the IRS, you talked about there's 3 penalties, right? After filing extension.
Interest and 2 penalties, yes.
I'm sorry, interest and 2 penalties. How do I avoid paying those penalties?
By paying your taxes on time. You can avoid paying interest, you can avoid paying penalty, you can avoid all of that stuff by simply paying your taxes when they're due and paying them on time. Even if you pay them by April 15th, you're going to be way less subject to penalties than if you wait.
So then with the extension, when is my new due date then for filing?
The extension is a 6-month extension. We used to have 2 extensions, and this confuses people. It used to be a 3-month extension, and then you'd file a second extension, and it'd be another 3 months. TCJA, I believe, or it could have been before that, I can't remember, got rid of it, got rid of the middle extension. It was before that. I think it was Obamacare. The CARES Act, I think, got rid of it, the middle extension. And after we got rid of that, then one automatic 6-month extension. And so if you file that April 15th, it's 6 months from the due date, which would be October 15th, is your new due date of your return. And that doesn't mean you have to wait till October. It means you can wait up till October. You can file any day between April 15th and October 15th.
Awesome. I love it. So what else would you say that I should know about filing an extension?
I would just say a couple of recap things. Number 1, it doesn't put you on a naughty list. It's not a bad thing. Number 2, it is not an extension of time to pay. You need to pay your taxes when they're due, which is when you earn the money. And then number 3, this is not a hard thing to do. You can literally fill out the 4868. You can mail that to the IRS if you want to do it on your own, or you can hire a tax pro. We file lots of extensions. It's not an issue, and it won't get you into any trouble. It's actually I consider it a good thing because it gives me more time to do my tax return.
Very good. Give me an outro and then we'll do an interactive.
Okay. Hey, thanks for watching and tuning in to this episode. It's such a pleasure to have you on the Tax Dot. I'm going to start again. It's such a pleasure. It's my pleasure.
Okay, Chick-fil-A.
Okay, Chick-fil-A. Hey, thanks for tuning into the Tax Dot Pro Show. I'm so glad that you stopped by today. Listen, there's a lot of information here about extensions. I know it's a lot. However, hopefully we have made it simpler and more impactful in your life, and you've learned something. If you've got questions or need help, feel free to reach out through our website, tax.pro. Don't forget to like and subscribe to our channel. That's going to help further our message of taxation and keeping it simple for taxpayers just like you. Hey, thanks for stopping by, and we'll see you on the next one.
Beautiful.
We didn't go into business extensions, but
We already did that one. It's a
we
different
already did that
episode.
one? Okay.
Yeah.
How's that Western?
No.
Oh, okay.
No, we did it. We did a rapid fire episode. I guess you weren't here.
I probably was. I don't know.
It was
Thursday.
quick.
It was Thursday.
Yeah, it was
And
quick.
I actually remember that.
It was actually great.
Yeah.
I think you were here. Yeah.
Hopefully it was great. Then we need to do an interactive. So how about this? If you've ever filed an extension for your taxes, leave a comment below. I want to know if that was a good experience or a bad experience.
Beautiful. Hey, this is way better. Having the challenge is so much more entertaining.
Yeah.
And
Good.
And it brings the content to life. I like
Good.
it.
What else?
That's it. That's 2 episodes, dude.
Awesome. Hey, thanks for stopping by. I appreciate you guys on the live. We will see you next time.